Hello and welcome to Hot Commodities. I'm Manisha Gupta and the top headlines at this hour are: the gold prices fall to a fresh 6-month lows in both international and domestic markets as investors prefer equities over the yellow metal. The crude prices continue to trade in a range on the prospect of more Saudi supplies, while optimism about the US and Chinese economies lift fuel outlook underpinning the prices. In the agro space, the sugar prices continue to trade under pressure while chana futures edge up due to unseasonal rains in some areas which could hurt output. And in the currency space, the Indian rupee gains today on the back of stronger euro and ahead of the budget session next week. Let's start with gold then, and that has hit a 6-month lows today as investors buy into risky assets despite lower prices on the yellow metal. Improving global economic recovery and the recent upside in the equity market is shadowing the investor interest in the precious metals. Meanwhile, a data release today shows that the gold imports in the month of January surged 23%. Remember, this gold was bought before the government announced measures to discourage the imports there. For more on the prices and the import numbers, we are now joined by Prithviraj Kothari. He's MD Riddhi Siddhi Bullion and he joins us on a Mumbai phone line. Mr. Kothari, hi, welcome to the show. Let's start with the prices first, and nearly $12 of a decline, $15.92 per ounce, just about holding. How much of a further decline are you expecting?
I think maybe major support should be around 1580 and 1565. That's a good buying level, I think so.
The Indian market's also breaching 30,000 on the lower side. Where do you see a support coming in there?
Support, I think it's around the 29,000, around 29,000 in M6 should be around 29,500. But if you see the 7 rupee should be, I think, should be the depreciation around the 55 or 55.50 maybe there. So I think in rupee terms, price more does not get more affected unless the international prices should be around 1580 to 1565 is the best buying level.
Mr. Kothari, also looking at the kind of import numbers that we have for the month of January, what's your sense now for the rest of this quarter?
It's all-time high. I think it's on Jan month of import figure should be the 112 tons in the Jan and 85 or 86, 87 on December. It means 200 tons of gold import in the just of January, December and January. So it's a good sign of the figure. And there is the huge demand also. The physical side is a huge demand. So it's basically the international market also. The physical demand should be hold the price.
But does that also tell you that you can expect more stringent measures coming in from the government this time around in budget?
I think the policy should be announcement. It's a good policy, and also there was a good sign of the gold depository scheme. It's a more effect on the international prices. A government opened the two-way trade, so open for export also. I think the $150 maybe correction is still there, because when the government announced the policy, it's a pressure on the gold side. If you see when the RBI announcement, RBI is the final report and government announced the policies, so almost the international prices drop down. It's because India is the main buyer. Last year, 2012 is the 960 ton import.
Well, absolutely. Those are interesting numbers coming in from the markets there. Thank you so much, Mr. Kothari, for joining us with your view. We also have a word coming from Madhu Kela from Reliance Capital on gold, and he has maintained a bearish stance on gold prices, saying that the rise in gold prices was due to global weakness and gold is unlikely to outperform tax-free bonds going forward.
See, what